Well, welcome back to Safe Harbor Financial's channel, navigating your path to success with industry-compliant financial services. Joining to discuss some pivotal news here, we have Jim, the CFO, joining us. First and foremost, welcome, sir.
Thank you, Kyle. How are you doing?
Living the dream, and it's a pleasure to get you on. So, I just want to dive into this because Safe Harbor Financial modifies the commercial alliance agreement with the partner Colorado Credit Union, and this is wiping some stuff off the liabilities of your balance sheet. Maybe break this down, give us the numbers, tell us what's going on here.
So yeah, Kyle, this is an important agreement. We've worked probably 6 or more months on hammering this out with partner Colorado Credit Union. Um, Probably the most important thing is that the agreement was due to expire at the end of March of 25, and we've now extended it for 4 years. So it creates a long-term relationship for those assets to be domiciled at this particular financial institution. And it's not just that it's 4 years; it's evergreen. Essentially, it auto renews every year thereafter, unless one of the other party gives a notice, a 1 year advance notice of non-renewal. So it's a really important agreement for the company. The other thing it did, most importantly to the balance sheet, is it relieves Safe Harbor Financial of the indemnity liability on the more than $55 million of loan book from which we derive loan investment income. Um, Previously, we had indemnified partner for all of those loans that were issued. Now, we don't carry those loan balances on our books, so you won't see them. We derive interest income from those loans, but the loans themselves aren't on our books. However, we had been carrying about a $1.2 million loan loss reserve against those loans in the event that any one of those loans, soured. Um, what this agreement does is it extinguishes that loan loss liability in its entirety. And going forward, while we will earn a little bit less interest income on those loans, we carry none of the liability and we'll be able to reverse that liability off of our balance sheet for year-end financials 2024.
Yeah.
So those are probably the two most important things. Separate from that, we had a number of different components that were a part of the commercial alliance, the previous commercial alliance agreement. And for investors who looked at it, there was an account hosting fee, there was an investment hosting fee, there was a loan hosting fee, and we've simplified that agreement to really just two fees: an asset hosting fee based on the size of the assets that our clients domicile at their financial institution, and an investment hosting fee. And so what we did in the asset hosting fee is we combined the investment hosting, the account hosting into one basis point oriented fee. So now our expenses for hosting the assets there are more closely aligned with our revenue, and the overall cost of hosting has decreased.
Yeah, no, this is absolutely incredible. I appreciate the brief insight here as we pass it off to the viewers. As always, we'd love to know what you think and consider subscribing because when pivotal news like this hits the wire, of course, we're going to bring it to you here. But on that note, as always, we look forward to catching you in the next one.